JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 12th of October 2021. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now also, just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So you have to check us out here on jfdbank.com and click on the research tab right there on the top. So now then, okay, sorry for that slight pause here. So yeah, basically let's start off from Nikkei here. As you can see, the index drifted back down today. However, it managed to remain above this downside line, the one that I kept talking about, and basically still there could be a possibility for this one to push higher. However, given the kind of proximity to this line, let's take a bit of a cautious approach here, guys, and basically if we get a move back below this downside line and a move below this 200-day EMA, then maybe yes, we could see a move back down towards the 27,481 zone, or the maybe even the 26,955 level, which is marked by the lowest point of August. But at the moment, I do understand that it's not maybe the best of the kind of scenarios here, but again, we'll just have to take what we have. And if you want to look at the upside, then maybe just wait for at least a push above yesterday's high near the 28,581 level here, and at the same time we might maybe climb above this 100-day EMA and then go test the 21-day EMA, or even move a little bit higher here. But again, long story short, for now, guys, it's a tricky one here. But yeah, keep your eyes on this downside line taken from the high of the 18th of March. We're currently resting on it, on top of it, but if by any chance the index starts falling lower here and moves below this downside line and moves below the 200-day EMA, then, well, I mean, we could consider maybe a bit of a down move again. Now jumping into Hong Kong's Hang Seng Index, and this one, I look at this one sometimes here, as you can see, as you know. But basically, the situation that we have here is also an interesting one, because first of all, we did get a nice rebound from this 23,771 territory last week. I talked about this one, and then we climbed higher, and what I said then was that if we pop above this 24,695 territory, then yes, we could aim for slightly higher levels, but only up until this downside line taken from the high of the 28th of June. Because we wanted to see, well, sure, so I wanted to see if this line will provide resistance once again, and so far, as you can see, it's doing its job. So it is providing that hold up. However, although we did retrace back down here, the price remains above that 21-day EMA. So I would say we're kind of stuck here, a little limbo, because in a way, if you want to aim for the downside again, then at least a drop back below this 24,695 territory would be needed, and then yes, we could go for the downside maybe again if of course the price continues to remain below that hurdle after the break. For the upside, pretty straightforward. Basically, we need to see a break of that downside line and just to be a little bit more on the safe side, a push above the 25,437 territory here, which is marked by the high, well, the current highest point of this week so far. Yep, a nice good pop above it would confirm a forthcoming higher high, and the next target, of course, could be this the highest point of September near the 26,560 level. But again, let's not rush into anything. Let's first see which way this one's going to break out to. For now, I'm keeping an eye on these two levels. The German index, DAX. So here we have an index that tried to make its way higher yesterday. However, because it kind of opened with a gap here to the downside, it filled up the gap, but it wasn't enough to bring it back into positive territory. And if we take a look at the cash index, well, right now, then you'll see that we are kind of getting closer to that psychological 15,000 mark again, and well, I mean, it's not really looking good here for the buyers, but for the sellers, from the seller side, I would rather wait for a drop below this area right here, this area in between the 14,983 and the 15,019 levels. So if we clear these two areas, and we also drop below the 200-day EMA, well, this is where probably it could spark more excitement in the eyes of the sellers here, well, this could open the door at least towards the 14,816 level again. But again, let's not rush into anything. First, let's continue monitoring this situation around this area, around that psychological 15,000 territory today, and yeah, let's see how that's going to play out. Dow Jones Industrial Average. So yesterday reversed back down, did try to break a downside line, this one that I talked about. It did break it, you can see, but it didn't have enough steam and didn't have enough power to stay above this downside line, and instead it reversed and drifted back down. However, if you remember yesterday, I talked about this 34,490 level, which, as you can see, acted as a perfect area of support. And what I said to you yesterday was that if we drop below that area, then yes, we could consider maybe a bit of a down move here. And if we take a look at the cash index, well, we'll see a similar story as with DAX. Basically, we are declining, and we are now below this 34,490 territory. So, and we're also below the 100-day EMA. So all this is kind of not really painting a very positive picture. So that's why I'm gonna lean a little bit to the downside here. But again, we'll be very careful in case this suddenly, let's say, climbs back above this 34,490 territory. Then, well, I'll take a neutral stand. But still, with the upside, I'm still sticking to this plan to wait for another break of this downside line. But this time, I want to see the daily candle closing, or the body of the candle kind of staying above this downside line at least, because although then we would still need to keep an eye on this area, this barrier, the area near the 35,000 mark. But this could at least be a good start initially. So so yeah, and then we'll take it from there. Quick update on DXY. The dollar index is still trading above this upside line from the low, the 16th of September. So to be honest, the outlook did not really change much so far. I'm still kind of cautiously bullish, but because I would rather wait for a pop above this 94.50 level, just because just to be a little bit more on the safe side, given that we kind of already did a good move higher. So yeah, if we do move above this 94.50 zone, then this will confirm a forthcoming higher high and potentially could attract more buyers into the game, unless, of course, this upside line fails to provide support and breaks. Then, well, maybe a bit of a retracement back down here could be possible. Now, looking at gold, gold is moving, at least trying to move back up. I talked about this yesterday and last week as well, that basically the fact that we broke this downside line and we stayed above it, this kind of gives a bit of a positivity here. And also, if you, of course, want to, if you kind of like this idea, basically we could be maybe seeing a somewhat of a possible bullish flag here. So So this little consolidation area, I mean, we do have our pole here, kind of not an ideal one, of course, but nevertheless. And now we're seeing this little consolidation here, where maybe it could be just a slight pause before it continued move higher. However, I would rather stick to a break of this 1770 territory first, and then kind of go higher, because at the moment. It could still be the case that we could see a move back down, especially if the commodity falls below the 1745 level. And to be honest, there is still a possibility for the bears to step in, especially if this 21-day EMA continues to provide resistance, and if we see also DXY popping higher. So don't forget that, guys. At the moment, let's see, like I said, let's continue monitoring these two levels here, the 1745 on the downside and the 1770 on the upside. And yeah, WTI oil managed to reach my target here, this 81.37, and also managed to overshoot it as well. But now let me just adjust maybe this Fibonacci extension. Now, of course, it's a little bit of a tricky one, but probably no, it's not. There's not going to be any adjustment here. It's just going to be a removal. Yeah, let's get rid of that. So now, let's see what we can do here. Basically, the only thing is probably to stick to is, of course, the upside. But if you want to be a little bit more on the careful side, a push up of the 82.15 level here, which is marked by yesterday's high. A nice pop above it. Yep, we could open the door towards higher levels as a forthcoming higher high would be confirmed. I do understand that we kind of did already have a decent up move here, and let's say if this is going to be that barrier, this resistance barrier that we're going to be keeping an eye on for now. Maybe we'll do a bit of a retracement here. Of course, if the commodity remains below this hurdle, if it does, then yes, maybe a bit of a slide back down could be possible. And well, look at the 23.6% retracement on the Fibonacci here, which is really not far from that key area that I talked about previously, the 76.95 zone, which is the highest point of July of this year. Around here we also have that 76.88 level as well, which is the highest point of 2018, and yeah, there and basically here we have almost the 23.6% retracement on the Fibonacci, matching those two levels. So again, let's keep an eye on yesterday's high. That's near the 82.15. A nice good pop above it. Yep, could open the door towards higher levels, but then probably I would suggest to keep an eye on the daily the body of the daily candle closing and staying above, or not closing but staying above this area. Like for example, we had it yesterday where we popped above the Friday's high, and yeah, and then the body also stayed, and yeah, we can see now that the bulls are still kind of active here. So long story short, keep your eyes on yesterday's high. If we climb above it, then yes, we'll go for higher levels. But if it continues to somehow provide resistance, maybe we could consider this little retracement here back down. Now, Bitcoin Cash, very quickly on this one, I would say not positive nor negative. It's stuck here. It's kind of oscillating around these 3 EMAs. It's also sitting still above this 586 level, which is marked by the lowest point of September. I'm sorry, the low of the 7th of September. Yeah, so far somehow this level is doing its job. It's providing support. So I would say if the crypto continues to trade above it, then there is a possibility maybe to see a reversal move back up. However, let me just adjust something here. So basically we do have this tentative downside line taken from the high of the 6th of September. In a way, if you want to look at some upside, then maybe you could be a little bit more comfortable on a break of this downside line, and then yep, maybe if you're looking for something even more cautious, then yes, a push above the current highest point of October near the 635 level here could be ideal. But again, let's not rush into anything. First, let's keep an eye on this barrier, and let's see how this is going to play out, guys. Now, jumping into AUDNZD, guys. So so far so good. I talked about this pair last week, and I said that, and well, a while ago as well, I kept talking about this one, and I told you that if we slowly continue to break these resistance barriers, then well, eventually my next target is the 200-day EMA, which we managed to reach perfectly here. We're not really far from this downside line here, taken from the high of the 29th of March. Now, don't get me wrong, it's a little bit tentative, but nevertheless a downside line which could get tested. But given the sharp up move already, which we saw here, maybe, just maybe, a bit of a retracement back down could be possible. However, if it stays somewhere above this hurdle, above this 1.0542 zone, a nice rebound here back up could be possible, and yep, we could then aim for the 200-day EMA again, and for this downside line. So so basically something like this could be possible. Now, in terms of the downside here, well, I would rather stick to maybe a drop below this 1.0496 territory. A nice drop below it may open the door towards slightly lower areas here, and then of course we'll take it from there. But I'll pick up on this one again if we do see a drop back below the 1.0496 level. NZDJPY, it's also quite interesting because we are near key resistance. So I haven't looked at this pair for quite a while, but looking at this picture here, we can see that the 78.66 level is currently getting tested. Yesterday we had a nice pop above it, but we failed to stay above it. Today we're seeing another pop above it, but again we're struggling to kind of remain above that hurdle, and currently that hurdle is doing its job and acting as a nice area of resistance. Also, what I want you to keep an eye on here is of course this little short-term upside line taken from the low of the 20th of August. So if you're looking for some upside, guys, yes, there is a decent chance that we could see a further move north. However, wait for that confirmation break again, and if we do push above that 78.66 level, then yes, certainly this could open the route towards the 80.18 level, which is marked by the highest point of May, and then we will take it from there. At the moment, if, let's say, this barrier continues to provide resistance, we could see maybe a retracement back down, but then what we'll have here may be a possible ascending triangle pattern. Of course, according to all the TE rules, you know that these tend to break to the upside. However, until we get the break of the upper side of the triangle, then we cannot really get comfortable with any up move here. So for now, long story short, we're waiting. Yes, we had a decent up move here, but now we want to wait and see what it's going to do and how it's going to behave near this barrier. And yeah, if it pops above it and stays above it, then that's great. For the bulls, and we could aim for higher levels. USDCAD, so a bit of a light in the end of the tunnel for the bulls here, because the pair did find some support, and let me just grab one of these lines. It found support yesterday near this 1.2446 level, from which it rebounded, pushed higher. However, it struggled with this 1.2494 level here, the one that I talked about previously. This one is the low of the lowest point of September, and which we are now testing, and it's acting as a nice area of resistance. So if by any chance we climb above it, then yes, we could consider maybe a bit of a move higher. However, keep your eyes on this downside line, because maybe we're not really done with the downside yet. Maybe at the moment we could just see a temporary correction before another slide, so keep that in mind. So yeah, guys, for now, long story short, if we do push above the 1.2494 level here, or maybe even the 1.25 zone, and stay above it, then yes, we could consider maybe a bit of an up move here, and yep, a bit of a retracement towards this downside line. If the pair starts falling below the 1.2446, well, then we could maybe consider a further move lower. GBPUSD, so we dropped nicely below this hurdle, below this 1.86 territory, and yep, we managed to reach one of my next targets here near this 1.8485 territory, and you can see that's the inside swing high here of the 30th of June. So we're currently resting on it, and it's basically a perfect hit here. Let's see if we can go for a bit of a retracement again. However, the retracement already happened, and we did find a holdup near this lowest point of September, and you can see that it's also a perfect hit. This 1.8537 territory got tested, and this time it played the role of resistance, and yep, now the big question here is where it's going to go next. Well, to be a little bit more on the safe side, probably just wait for, if you're looking for the downside, just wait for a drop below the 1.8485 territory. This could increase the pair's chances of drifting lower, where we could aim for the 200-day EMA or even below that, slightly below that. For the upside, now this one's a difficult one here. Even if we pop above the 1.8537 territory right here, yes, this could open the door maybe to some higher levels. However, on the upside, we do have a lot of obstacles on the upside, so yeah, at the moment I would say be very careful here. Yes, if we do pop above it, we could go go slightly higher. We could still class this move as a correction before another possible leg of selling, because we're still below these two downside lines. So long story short, guys, keep your eyes on these two levels for now. For today, if we pop above the 1.8537, we could go for a bit of a larger correction higher, but keep your eyes on that 1.86 territory. For the downside, 1.8485 zone, that's where we're keeping an eye on here, and if we drop again below it and stay below it, then lower levels could be met. And finally, EURUSD. So this one is stuck here. First of all, we need to get rid of this hurdle, no longer valid. This 1.1563 territory, I spoke about that level, and let's mark the high of the current highest point of this week, and that's roughly around the 1.1587 zone. So if you're looking for the upside, then basically wait for a break at least above this downside line taken from the high of the 14th of September. If you're looking for some downside, then well, the safer option here could be to wait for a drop below the current lowest point of October near the 1.1529 territory, and then yep, we could go for some higher levels, but for some lower levels. But like I said, at the moment, I don't really like these situations here when we're just kind of really undecided. So yep, like I said, let's be a little bit more on the safe side and wait for a violation of either of this downside line, this short-term one taken from the high of the 14th of September, in order to consider an up move, or let's wait for for the downside here, a break of this 1.1529 level, just to be a little bit more on the safe side, because a break below it would confirm a forthcoming lower low. So guys, that's it for this session. I really hope you found it useful, and thank you very much for watching and listening. I really appreciate your time, guys, your views, your likes, your comments, so really do. So if you want to catch me tomorrow, as always, at my Traders Espresso, 6 o'clock GMT time. For now, have a wonderful trading day, stay safe, have your stop losses in place, and everything will be fine. So thank you very much, and bye-bye.